The base metal market is entering a period where US-centric policy, legal and geopolitical developments are becoming primary drivers of price direction, capital allocation, and trade flows. While China has historically dominated the demand narrative, 2026 is increasingly defined by Washington's legal calendar, trade doctrine, and strategic industrial policy. A series of inflection points spanning tariff rulings, Federal Reserve governance, environmental deregulation, and critical mineral strategy are now central to the outlook for industrial metals. In our Metals Market Outlook 2026 Chasing Stability, we outlined, in our What to Watch section, a host of key dates over the year ahead, each with the potential to shape safe haven demand, directional momentum for commodities and currencies. Without going through each date specifically, an obvious takeaway is that US-centric events dominate in 2026. Indeed, we're only 2 months into the year so far, and already we've had a series of US-centric risks taking centre stage in the base metal market. For example, in January, the outcome of the future of tariffs for critical minerals under Section 232 was delayed by 150 days. President Trump chose Kevin Warsh to be his choice as the next chairman of the Federal Reserve, while launching criminal investigations into the current Federal Reserve Chairman Jerome Powell and Federal Reserve Governor Lisa Cook. President Trump announced the repeal of the 2009 greenhouse gas endangerment finding. The US administration announced the start of Project Vault, in addition to its first critical mineral and mysterial event. And we heard over the weekend that Trump's country-based reciprocal and fentanyl-related tariffs under the International Emergency Power Act was deemed illegal by the Supreme Court. Arguably, however, one of the most structurally significant developments is the launch of Project Vault. So what is it? Well, it is a large, long-term mineral reserve for civilian industrial use designed to reduce US exposure to Chinese dominance in critical minerals such as gallium, cobalt, and rare earths, following recent export controls imposed by China. It aims to allow American manufacturers, from technology firms to automakers, a decentralized way to secure strategic minerals rather than having to have specific planning for government or military use. Participating manufacturers commit to future repurchases at predetermined prices, a structure intended to dampen commodity price volatility and stabilize input costs over time. The aim is to maintain 60 days of supply for minerals for emergency use. So who will it be funded by? Well, it's going to be capitalized with $10 billion in loans from the US Export-Import Bank and $1.67 billion in private capital. Looking to who's involved, more than a dozen major manufacturers, including automotive, aerospace, technology, and energy firms, and global commodity trading houses are participating, signaling strong industry demand and credibility. The updated US critical mineral list of 2025 included copper and lead, resulting now in all base metals, copper, nickel, lead, zinc, tin, and aluminium, being deemed critical minerals. Based on an initial assessment, roughly half of the total capital of $12 billion will be directed towards securing supplies of copper and aluminium. However, with more than 1.1 million tons of copper having entered the US in 2025, resulting in COMEX accounting for about 2/3 of global visible exchange stocks, the US currently has around 7 months' worth of supply for demand. Therefore, with this in mind and following comments from Project Vault investor Robert Freeland, it appears as though the initial rollout will have a far bigger impact on niche metals like rare earths than it will for copper at this stage. However, we are paying attention to the impact on aluminium, which faces 50% tariffs on all refined and derivative products entering the US. As it stands on a monthly basis, COMEX aluminium stocks are at their lowest level since May 2019, with high import charges discouraging imports into the country. Unless we see the US move to alter current trade policy, this will remain a key area of focus for us. The requirement to hold 2 months' worth of stock creates a structural demand backdrop for critical minerals, while potential state-aligned purchases could lead to less price-sensitive procurement, all in all supporting the demand outlook. On the other hand, the goal to establish price floors through adjustable tariffs could reduce free market price discovery, with a likely increase in regional price distortions widening the spread between US preferred supply chains and global benchmarks. So in conclusion, Project Vault does not create an immediately broad-based bull market in base metals. Instead, it reinforces the strategic importance of selected minerals. It introduces elements of managed pricing and state-aligned demand. It increases geopolitical fragmentation in commodity markets, and it reduces downside risk for targeted materials while maintaining upside volatility. Simply put, it is increasing the move away from critical minerals being purely cyclical commodities towards more strategically managed assets.